Welcome to the Wealth Wisdom, where money has history and knowledge becomes power.
What if the greatest shift in human history didn't come with a revolution, a war, or a global announcement, but with a quiet vibration in your pocket? A notification, a balance update, a simple digital transaction. What if the biggest transformation of the modern age didn't feel like a transformation at all, because it was wrapped in convenience, because it arrived disguised as progress, sleek, fast, frictionless, while quietly rewriting the very meaning of money, control, and privacy? Most people celebrate the rise of digital payments. They love the speed, the ease, the efficiency. They love not carrying cash, not handling coins, not waiting in line. But almost no one stops to ask the deeper question: why is the world pushing so aggressively toward a completely digital financial system? And who benefits the most from that shift? Because behind the screens we tap, behind the apps we download, behind the systems we rely on every single day, there is a story, a history, a deliberate design, a long-term blueprint crafted over decades, piece by piece, until the world finally crossed the point of no return. This is not a story about technology evolving on its own. This is a story about money being reshaped to monitor every human transaction on Earth. And the strangest part, this wasn't done suddenly. This wasn't done violently. This wasn't done openly. It was done gently, with incentives, marketing, and convenience. A soft redesign of reality that no one was supposed to notice. To understand how we got here, we have to go back farther than most people think. Not to the internet, not to Bitcoin, not even to credit cards. No, we go back to a time when governments realized something terrifying. Money was invisible. Cash left no trail. You could hand someone $1, a rupee, a euro. And the moment it changed hands, the record vanished. There was no timestamp, no digital footprint, no surveillance mechanism. For ordinary people, this was freedom. For governments, this was a nightmare. During the Cold War, intelligence agencies discovered that money was one of the hardest things to track. Criminals used it, spies used it, rivals used it. Black markets thrived, tax evasion exploded. Entire financial empires existed in the shadows. This is when the first seed was planted. The realization that if money could be digitized, even partially, it would become trackable, traceable, monitorable, visible. In the 1960s and 70s, the very first digital banking systems began to emerge, not for the public, not for convenience, but for tracking large-scale financial movement. Governments needed to see what was happening behind the curtain of global money flows. They didn't announce this as surveillance. They called it modernization. But the real revolution began in the 1990s, the moment the internet reached the masses. Suddenly, humanity shifted from physical to digital behavior. People began leaving digital footprints everywhere: emails, search queries, online purchases, messages, website visits. For the first time ever, human behavior could be recorded at scale. Governments watched, corporations watched, banks watched, and they all realized something extraordinary. If money itself became digital, they would have a complete map of every individual's life. Not just what people said, not just what they clicked, but what they valued. Money reveals priorities. Money reveals relationships. Money reveals fears, desires, habits, weaknesses. Digital money was the missing puzzle piece in the emerging surveillance web. And so, a new strategy formed. Online banking was popularized. Credit and debit cards became dominant. Electronic transactions replaced cash. Payment apps exploded. Everything became fast, easy, and convenient. But convenience was only the bait. Every digital payment created a data trail. Every purchase became a data point. Every transaction became a brick in a growing wall of financial visibility. The world didn't notice, because why would they? Digital payments were simply easier. People embraced them willingly, never realizing they were helping build a system that watched everything. But then came the turning point, the moment that accelerated everything. A global financial crisis shook the world. Banks collapsed, governments panicked, people lost trust in the old system. And in that chaos, the perfect justification emerged. We need a safer, more controlled financial system. Governments didn't say more controlled out loud. They said more stable, more transparent, more efficient, but behind closed doors, they needed a way to prevent future collapses and to make sure no money ever moved in the shadows again. And then, ironically, the next shockwave didn't come from a government. It came from a mysterious figure named Satoshi Nakamoto. Bitcoin, decentralized, global, borderless, digital. Bitcoin proved something revolutionary. Money could exist completely online. Money could move without banks. Money could be tracked through ledgers. Money could be programmable. Every central bank on Earth felt the impact. If they didn't evolve, they would lose control over money itself. They had to move fast. And so the world entered a new era, the era of central bank digital currencies, CBDCs, not cryptocurrencies, not decentralized, not private. CBDCs are digital money controlled entirely by governments. This is the point where digital money stopped being a convenience and became a system. A system with total visibility, a system with total traceability, a system with the potential for total control. By the early 2020s, dozens of nations were already experimenting with it. China launched the digital yuan. Europe studied the digital euro. The United States explored the digital dollar. India, Nigeria, Brazil, Russia, all running pilot programs. Every government used the same messaging. It will reduce crime. It will stop corruption. It will make payments safer. It will help the poor. It will strengthen the economy. But the unspoken reality was more profound. Digital money allows governments to see everything. Every small purchase, every donation, every transfer, every subscription, every habit. Nothing is invisible. Nothing is unrecorded. Nothing is private. And that's not even the most dangerous part. The true game changer is programmability. Programmable money is money with rules. Rules written not by you, but by the central authority. Imagine a world where your money expires after 30 days unless you spend it. Your money can only be used within 5 kilometers of your home. Your money cannot be used for certain products. Your money is frozen instantly if you raise suspicion. Your money requires approval for foreign transactions. Your spending is automatically restricted to government-approved categories. Your financial profile determines what you're allowed to buy. These features already exist in CBDC prototypes. Some countries have tested digital currencies that limit fuel purchases to enforce environmental policies. Others have tested automatic transaction rejection if monthly spending exceeds a threshold. Others have built tracking systems that link digital money to digital identity, creating a unified behavioral profile of each citizen. Once digital money is fully adopted, the entire financial life of every individual becomes transparent and therefore controllable. The fallback solution, cash, is slowly disappearing too. Not officially banned, but practically phased out. Stores stop accepting it. Banks reduce ATM networks. Withdrawals become limited. People simply adapt without noticing the long-term consequences. And every so-called privacy protection added to these digital systems comes with loopholes. We won't track small transactions, except the system can track them anytime if rules change. We won't share your data across departments, except during emergencies, which can be declared at any moment. We will protect user privacy, except the architecture itself requires storing everything. Every promised fix is temporary. Every reassurance is fragile. Every safeguard depends on trust, and history shows that trust erodes when power grows. Meanwhile, the world trends tell the real story. Over 92% of global money is already digital. Around 75% of transactions leave permanent records. Tech companies collect thousands of data points per person each day. Biometric IDs are merging with payment systems. and 25 countries are preparing to switch to CBDCs within this decade. Digital money is not becoming the future, it is the present. And the deeper truth is this: once money becomes digital, it becomes part of your digital identity. And once it's part of your identity, it becomes a tool that can shape, influence, or restrict your behavior. History repeats in patterns. A crisis emerges, a new system is introduced. The people accept it. Convenience becomes the Trojan horse. Control becomes the unintended, or intended, consequence. It happened with surveillance cameras. It happened with online data tracking. It happened with national security measures. And now, it's happening with money. Every step of this evolution has followed the same rhythm. A problem appears, a solution is offered, people comply. Governments gain new powers. Those powers never shrink, they expand. What we are witnessing now is not the upgrade of money, it is the upgrade of monitoring. For the first time in human history, entire populations can be influenced financially instead of physically. You don't need to punish people with force when you can control their ability to spend. You don't need to police behavior when you can program incentives and restrictions into digital wallets. The future won't need force, it will use money. Digital money knows your habits. It knows your priorities. It knows your schedule. It knows your relationships. It knows your temptations. It knows your fears. Money is the purest form of human truth, and the new system ensures that truth is always visible. If there is one fundamental lesson in all of this, it's that the digital money era was not an accident. It was not a random evolution. It was a carefully crafted path, built gradually, one convenience at a time, until tracking became effortless and unquestioned. Digital money didn't take over because people demanded surveillance. It took over because people demanded convenience. That convenience became the bait, the tracking became the cost, and the control became the consequence. We now stand on the edge of a world where financial privacy is not rare, it is extinct. Where money is no longer neutral, it is programmable. Where every transaction paints a picture of who you are, and those who hold that data hold power over your life. And when the final shift happens, when cash disappears, when CBDCs replace traditional money, when digital identity merges with digital currency, the question every person will have to face is simple: did we choose this system, or did it choose us? If this message opened your eyes, share it, because awareness is the first defense. The systems shaping the future aren't waiting for permission. They're already here, already watching, already rewriting the rules. And the story of digital money is not just about how you pay. It's about what you give up when you trade freedom for convenience. If you want more deep, long-form breakdowns like this, subscribe, stay curious, and keep questioning the world being built around you before it's built over you.